So if the rate of change stops, right, you've stopped the pressure on markets. Now, it doesn't mean they explode higher. It's not 2021 all over again. But if the pressure stops because the rate change, because QT stops and they stop raising rates because they want to see how bad this is. Okay, so the probabilities then come of rate cuts, or if not, at least it's going to be stability. They're unlikely to raise rates higher. Okay, so that's generally good for risk assets because they're forward looking. So that's where it comes into crypto. So crypto is really interesting. Same with technology stocks, is they are in an exponential logarithmic uptrend because they are network adoption models.
The cryptocurrency sector has copped a hammering so far in 2022. That's no surprise to anyone, but there comes a time where even the biggest crypto fans will start to question where they should keep their diamond hands. At some point, crypto investors might begin to look at the red splash all across their portfolio and think, should I just sell? When we're looking at the stock market, we've got over 100 years of history to compare to. We're able to look at previous market crashes and find similarities from the past that closely match what's happening to the market and the economy today. This can provide insight into what might come in the future and comfort that eventually things are likely to turn around and the stocks that we've lost money on will recover. Now, with individual stocks, that's not always the case, but so far the overall market has always come back to beat its previous high. Crypto doesn't have such a long track record. Bitcoin was invented in 2009, and it wasn't really until 2017 that it started to generate attention in the mainstream. Over that time, Bitcoin and the rest of the crypto sector have already gone through multiple boom and bust cycles. So given that Bitcoin still has another 8 years until it can have its beer, does the past give us any clues as to when the current crypto winter might be over? Macro investor and CEO of Real Vision, Raoul believes that the huge opportunity that the potential of cryptocurrency presence combined with the horrible macroeconomic landscape currently playing out is presenting investors with some of the most incredible buying opportunities they may ever get in their lifetimes. Raoul lays out why he's so bullish going into next year. Inflation is looking like it has rolled over, and this will consequently cause the Fed to begin pivoting on monetary policy. Before we listen to Raoul, please remember to smash the like button and consider subscribing to our channel if you are yet to do so. Thanks for watching our videos. We appreciate you so much.
So in technology stocks, we've got the relentless, ongoing, ridiculous pace of rise of AI, robotics, EV, space, Internet of Things, 5G, 6G, genetic sciences, all of these things are all coming together at the same time. It's the fastest pace of change humanity will ever go through. It's hard enough for us to deal with on societal level, but that's not stopping. Part of that is blockchain technology, digital assets. They're in the same exponential trend, but maybe even faster, because crypto with 300 million users is the fastest adoption of any technology the world has ever seen, twice the speed of the internet. So what you're thinking, so if you can visualize, is you've basically got this massive uptrend that is exponential in nature, but when you put it on a log trend, it's quite nice and smooth. But you've got these big swings. Those big swings are driven by the macro. So what we've done is we're at the bottom of the macro cycle. The beach ball is now being held underwater. But don't forget, every day there's new people building in the ecosystem, there's new adoption. People like Ticketmaster have issued 10 million NFTs without anybody realizing. The scale of what is happening is ridiculous. So the beach ball is held underwater. The moment quantitative tightening or rate rises stop, the beach ball rises above the water. You can't hold it down. And so that is why I am incredibly interested at this moment in time, right here, right now, because I think we're getting very close to the point where growth implodes. We've already seen 2 quarters of negative GDP in the US. We've already seen housing rollover. We've already seen supply chain issues ease. We've already seen most commodity prices fall 50%. We've already seen the dollar explode higher. The dollar's hugely deflationary because the largest exporting nations in the world, Japan, Germany, China, have all seen their currencies decline massively. So they're now selling finished goods at much lower prices. So the macro turn is very close. When we look at on-chain analytics, we start to see things that only ever happen in these massive bear market sell-offs, the 2014 sell-off, the 2017 sell-off, stuff like that. We also are at the bottom of the logarithmic trend channel, 2 standard deviations oversold. That's usually a good one. We're at the 5-year exponential moving average. That level has proven to be about the best risk reward you can ever find. Things like, if we use technical analysis, things like the RSI are as oversold as they have been at the bottom of every other cycle. So we've got this massively oversold crypto market at the time where the macro narrative is at peak. Everyone's like, inflation's going to be 20% forever, and Europeans are going to be dying in the streets because there's no food, and they're going to, they can't afford to heat their houses, right? That's the narrative right now. Okay, so how much worse can this be? And any rate of change means that the risk reward of digital assets from here, normally when you get to this confluence of events, the risk reward is somewhere between 20 to 50x. Now, it depends where you are on the risk curve, which is going to ask the second part of your question, Mark. So Bitcoin is the least attractive asset because it has least attractive of the major assets because it has more stability, further network effects. Therefore, as you get further network effects, your growth comes down over time. So, where would Bitcoin go in the next cycle? Who knows? But let's say 200,000. But then we look at the network adoption effects in Ethereum. How many people are building on the Ethereum network? The ability to now get yield on the network. What's that going to mean for DeFi? Who's going to build DeFi on top of this new kind of benchmark yield rate that's coming out of this? All of the people who are building NFTs, all of the stuff going on. Okay, that's mainly happening on Ethereum right now. Great. Ethereum's slow and Ethereum's expensive. So the market will seek the path of which they can get more stuff done at a faster pace, and they will make trade-offs. Trade-off is decentralization versus speed and cost. So when you move out the speed and cost curve, you basically arrive at Solana, Avalanche, Algorand, there's a whole bunch of these layer ones. So, then you start splitting out those assets and say, okay, how do I differentiate? And it's quite difficult, unless you're a technologist. But basically how I perceive it is Solana seems like it wants to go for the masses and create these kind of onboarding experiences, front ends. They've got a mobile phone. They've got amazing NFT marketplace. They seem like they want to get involved in the public. Then you've got Avalanche, and that seems to want to be more technical. We've got these subnets, you can do your things, it's a bit more technical, and we can probably financialize real assets on it. That seems to be their narrative. Algorand, somewhere like the financial marketplace, stuff like this. So I just look at these and say, okay, what we're going to see, the market probably, Bitcoin underperforms, Ethereum next, whichever one of these, and I don't know which ones, will do pretty well. And then there'll be new tokens of which we don't really know yet coming in that solve more problems, where you'll see the 1000x upsides that we've seen in past cycles. And then there's a bunch of shit that goes to zero. Well, it doesn't go to zero. It just, goes up and down with the speculative hype flow. So that's kind of how I'm seeing that. So in the asset management side of what I'm doing, we're going further out the risk curve now, finding people who are taking those bets, because those bets are going to be more important drivers of returns than ETH or Bitcoin over time.
In other news, the next Bitcoin bull run will have to be much different from historical cryptocurrency rallies in terms of story and utility, according to Galaxy Digital CEO Mike Novogratz. Compared with previous bull runs, the next Bitcoin rally will have to be more focused on utility and less on the story, Novogratz predicted during a panel at the Token 2049 crypto event on September 28. The Bitcoin bull run of 2017, one of the biggest historical rallies, was mostly about the story, the CEO said, referring to the cryptocurrency's run from about $1,000 to $20,000 within 1 year. According to Novogratz, the 2017 bull run was primarily about the story of people not trusting the government and wanting more privacy and decentralization. It was a Gen Z millennial revolution, and it was global. That's a powerful story, the CEO noted. Bitcoin hitting all-time highs above $69,000 in November 2021, another big rally, was really generated by the COVID-19 pandemic, Novogratz said. He suggested that the price action in 2020 and 2021 was probably 80% story and 20% utility, referring to the growing utility use case of digitalization amid the pandemic. Ether and all the other level 1 started really accelerating the work to build a shared blockchain that we could build companies on top of, Novogratz stated. In contrast to the aforementioned cryptocurrency bull runs, the next Bitcoin rally will have to be 50% story, 50% utility, Novogratz predicted, stating, "It's people building applications, people building systems that are fast and scalable and that are user-friendly. We don't have them yet, that's why we are where we are. But in the next few years, they're coming." What do you make of the opinions expressed by Raoul Pal and Mike Novogratz? Please give us your opinions in the comment section. Thanks for watching.